Okay, good evening, everyone. Thank you for tuning in today. It's a pleasure to welcome you all to this exciting occasion as we launch our new fund offering in the consumption space, the ITI Bharat Consumption Fund. With me today is Mr. Rohan Korde, and we are expecting Mr. Dhiman Shah. They are the fund managers of ITI Bharat Consumption Fund. Buddies from Mumbai, and he's also a bachelor in commerce from RI Podar College. He has joined asset management funds for us. The offering, the NFO that we are today launching, which is in the consumption theme. It's an open-ended equity thematic fund, and it aims to benefit by investing in companies which are engaged in the consumption-related activities. Right. Our goal today is to equip all of you with the information that you might need to understand how our fund could fit into the investment strategy and help you achieve your financial goals. So without further ado, let us begin our discussion today. Dhiman sir, if you're on call, if you could provide an overview of the consumption category for our audience and just briefly highlighting what this category consists of and how can investors benefit from it?
So it is, am I audible?
Yes, sir, you are.
Yeah, thank you.
Thank you, sir.
So thank you everyone for being on the call. Quickly, I think this is a thematic fund, and the counter to everyone's income is, of course, consumption. It's almost minus the savings. It is, what you have is consumption. Today, consumption is going to be one of the most powerful themes, and in some way, it has already proliferated. Empirically, we have seen, as countries graduate from being an underdeveloped to being a developed nation, some of these themes have a hockey stick impact, and they grow much faster than the underlying economy. And that's precisely what we endeavor to give in this today's in this offering. Fortunately or unfortunately, the timing for this fund has, sort of been bang on. And last but not the least, it's been further benevolent from our FM, who proliferated consumption and only consumption in this budget, although there were many touch points of this very landmark kind of budget. It is kind of propagating consumption across the board. Consumption can be, structural, it can be cultural and digital. Digital is the newest and the most important leg as people, graduate being from being on offline to online, and the ease and the pace of doing business is phenomenal. Structural because I think as India graduates, it will, look at themes coming very, very fast and very, very immense. Cultural to some extent, which is premiumization, nuclearization of families, and further dispersion of growth in the underlying population itself. And digital, I already spoke about. So that's what it is. I think all encompassing, the consumption basket per se, the flavor that it brings, touch points, very many industries, and it's not confined to only FMCG that we know. So clearly, I think it's a very powerful theme, and the timing couldn't have been more better. Thank you. Over to you, Saurabh.
Yes, thank you, sir. Thank you so much. Rohan, the next question for you, if you could outline the reasons why, beyond the ones that Dhiman sir mentioned, what makes this fund a very compelling investment opportunity in today's time?
So what we feel is that the broader index, it does not completely capture the consumption picture, right? The broader index as such has multiple sectors. But whereas if we look at the entire
Right.
consumption theme, then we have FMCG, which is 29.3% of the index. But apart from that, the remaining is made up largely by the discretionary side of things. So we have autos with nearly 22%, consumer services with 17%, telecom nearly 10%, consumer durables, healthcare, power, services, even realty forming some part of this index. So
Mute,
the
mute please.
overlap as
No,
such
I'm not
with
on mute.
Nifty is just 31%, and with Nifty 500 is just 37%. So this theme, as Dimat already mentioned, it's a very powerful theme. And for anyone looking at a particular discretionary spend or even a durable spend or simply a recovery in the staple spend, I think this index can capture that picture quite comfortably. And another thing we need to know is the performance of this consumption index as well. So if we see the returns that the consumption index has given over a period of time, and if you can switch to that slide, yes, thank you. It is in the last 6 of the last 11 calendar years, it has outperformed both the Nifty 50 TRI as well as the Nifty 500 TRI. And even in one of the years where it actually underperformed them, it is in calendar year 2016. And everyone remembers what happened in 2016. It was a year of demonetization where the entire consumption basket took a hit. So, more or less, we can see that the returns have been quite better than both the Nifty and Nifty 500. And if you see the table on the right hand side, then the volatility in terms of how the returns have been generated has also been lesser as compared to the benchmark indexes. So this powerful theme can deliver good returns, which many in most of the years has been better than the benchmark, comprising of all the sectors. It has been better than those returns, and the volatility that an investor sees while attaining those returns is relatively lesser. So in current environment, we feel that with a push coming into the from the government itself, that all these years they've been looking at the supply side of things. Now they're looking at the demand side of things as well. I think this will help the entire consumption basket do quite well over a period of time. Even if it has outperformed the broader markets in the previous year, we believe that outperformance will continue. And in fact, we might be in for a renewed phase of interest and growth in the consumption basket.
All right. Thank you. Thank you for your view on that, Rohan. Dhiman sir, over to you again. If you could briefly highlight what at this point of time would look like the main levers that help consumption-related funds or the whole consumption story as such to propel to newer heights. Dhiman sir, are you with us? Okay, Rohan, do you want to take this up? If you could tell us
Yeah, sure.
what would be the next
I'll
main drivers?
jump in with the answer. So there are three major levers that are boosting the consumption story. Firstly, is that the growth projections for the index are pretty much on the higher side. If you can just move the slide forward, we can refer to that. Yes. So if we see the EPS growth that has been shown in the previous financial year, plus what independent agencies are projecting for growth on earnings for the consumption index is significantly higher as compared to both the Nifty 500 and the Nifty 50. Along with this, the return ratios, the ROE that the consumption basket shows is also much higher than the other two benchmark indices. To some extent, this is captured in the higher valuation in terms of P multiple that the consumption index has. But if we look at the chart on the right hand side, after attaining a peak of 77 times 1 year forward P multiple, the valuations have tended to be around the mean or slightly below the mean for a prolonged stretch of time. For the past 3 years, what we have seen is that the valuations have been below the mean. So currently, it is trading at below the 5 year average P multiple. So the recent underperformance for the sector coupled with the boost that we got in the budget for the consumption stocks, this makes the entire outlook on the consumption sector quite attractive. And this will be done by investing in companies which have sound fundamentals, high return ratios, good cash flow generation, especially on the traditional robust companies side, the compounder side. So it gives a more grounded approach to the entire basket of stocks that we are investing in. These are names that investors are familiar with on a day-to-day basis. They use the products, they know the ins and outs, the pros and cons of each product that they're utilizing. So in a way, this basket will help capture us the growth in the entire consumption index. And timing wise, because the valuations are at a discount to the historical multiple, we can see as growth picks up, we can see the P multiple also uh, potentially capture the earnings growth trajectory which can come in.
All right. Okay.
I just want to, if I can just interject,
Absolutely.
one important point is, the relative high valuation of this underlying index, both in terms of PE and price to book. Now, that also, the counter to that is also the fact that we have some of the best brands, some of the most high cash generating companies within this fold. And as a as a corollary to that, it will always command, because surety will always command a higher P, and that's why it may look slightly at a premium to the underlying. And one more important point and very crucial to understand is that over all the time frames, be it 10 years, 5 years, 3 years, 1 year, this index has managed to outperform not only Nifty 50 but also Nifty 500. Uh, that's one. And uh, given the underlying volatility, it's also been lesser volatile. So you not only get lower volatility in comparison to both Nifty and Nifty 500. So I think that's a very crucial point.
Absolutely. So lower volatility, better returns is something that the index has historically generated. The current valuations are also supportive. So thank you for both your inputs. If anyone could take up the next question, which is on the portfolio construction, how would you be constructing the whole portfolio, given that there are a lot of companies that you could choose from? Dhiman sir, if you want to put in.
Yeah. So typically, all the underlying stocks which fall within our parameters of consumption and the way we have defined consumption will typically be around 400-500 stocks. And that is not to say that, the recent pipeline of IPOs, we'll see some of them only being added to in terms of the universe monitorable. Applying certain parameters and key criteria to these, we will further filter it down based on our overall approach for because we need compounders, which will be around 30-40% or more. Correct me if I'm wrong, Rohan. And we will have high growth companies, and then not to miss out on the new emerging ones, including the digital ones, which kind of
I
Yeah,
think
so this will basically balance out the portfolio. The established and robust companies typically correlate to the large caps. The high growth potential companies correlate to the mid caps. The emerging trends correlate to the small caps. So we will have balance of large, mid, and small in the portfolio. Apart from that, we'll also be catering to all generations of investors.
is only 30. So ideally, we would like to have a slightly more concentrated portfolio over here.
all right. Thank you. Thank you, Dhiman sir. Rohan, you were adding your bits.
Yeah, so we will be able to cater to all categories of investors, be it Gen X, Gen Y, Gen Z. Everyone's product choices, everyone's likings are different now. The new generation, Gen Z onwards, are more open towards new experiences and newer challenges, whereas The Gen X is more comfortable with established brands and older business models, maybe more towards general trade as compared to modern trade or even e-commerce. So I think this portfolio with the blend we have of established and robust with 30-40%, high growth with 30 to 40%, and emerging trends with 20 to 30%. Apart from having a balance of large, mid, and small, we will also have a balance of how the portfolio is seen to have some product or the other that is used by all generations. It can be a investment portfolio for or a fund for all generations. That is how we are trying to position this.
Great, great. So a fund which every generation could probably look to invest in. That you've answered a part of the next question, which was who are the kind of investors who could look into investing in this fund, and why should someone consider ITI Bharat Consumption Fund at this point? So part of it you've already answered. If you could tell us why should we look into investing into this fund?
So I think one thing you can be assured is that it will be a true to label consumption offering. It will look to invest in companies that will benefit from what people consume. And some stocks which have underperformed in the past are offering good opportunities. So we can also consider them for the portfolio. And there is generally a consistent growth trajectory. Many of the emerging companies have a strong growth trajectory as well that we can consider in the portfolio. The budget was also consumption oriented, so that also gives us confidence that the focus of the government is now on the demand side of things as well. So it's a fund which can be considered by all generations, which can invest in a mix of established, scalable, and emerging businesses. And as we saw, there are 9 sectors that we can invest in, which fall under the consumption space as defined by AMFI. And as far as our stock picking goes, it will be a combination of both top-down and bottom-up portfolio creation. So it will make it market cap agnostic. So while being true to label as a consumption fund, that is the only thing we are focusing on. We are not looking at having specific market caps. It will be market cap agnostic while following the definition we already saw in terms of the allocation, portfolio allocation in established and robust, growth and emerging. That is the only allocation we'll look at. And the investment universe will be over 500 stocks for this fund. So it will be suitable.
Let me also,
Yes, sir, please continue.
yeah, sorry. Let me also interject with one or two relevant examples here. I think India, from being undernourished, underconsumed, kind of, let's say, in a as simple as basic a category, milk. Today, India is the largest producer of milk globally. So really, we have come down from nowhere to meaningfully somewhere. And we are also amongst the largest producers of dairy products and soon even exporter. When telecom came to India around 94, 95, whenever, we were nowhere in the picture in terms of what the telecom could do. Today, we are the third largest consumer and with a third largest, telephone base in terms of, mobile handsets and so on and so forth. We have consumed about 800 billion minutes of data as a country. So clearly in the top 3, maybe behind China and US. So clearly, I think so. You can see a nation which was sub $1,000 per capita graduating. We are closely to the cusp of reaching $3,000, give or take, by next year, or certainly by next to next year. And empirical evidence shows that, some of the themes that can take off is very, very large. Take a case in point in tourism. Today, quite a few airlines, and it's a noticeably a proud thing to do. Quite a few airlines now offer joint meals. So that is the power of tourism. Apart from China, I think the most prolific travelers globally are now Indians. So clearly, I think with even we touching just the cusp of 3,000, which is somewhere between a developed nation and an underdeveloped nation, as we graduate from here till, let's say, next 5-7 years, we would have crossed a $5 trillion economy, certainly, and per capita, $7 trillion, and a per capita of, important landmark or 5,000. Empirically, in countries like China, you have seen, so many themes just taking off big time. And I think that's the precious moment that we all are wanting to capture via this fund and ensure that, commensurate underlying returns by companies in those themes are captured by us. So that's clearly the message.
All right. Thank you so much, sir. Uh, in fact, thank you, Rohan and Deeman sir, for your insights on the fund and the category as a whole. Before we open up the floor to questions, is there anything else you would like to share about the fund or our AMC? Deeman sir and Rohan.
I think one important message to everyone present on this call, and it's a very pertinent point. Uh, most of them see how the AMC does in terms of the numbers. In terms of numbers, of course, by and large, we have delivered, and we continue to endeavor to deliver the strong results. Yes, there will be ups and downs. It's not a straight jacketed line. But more importantly, I think is, and kindly pay attention to what I'm saying. Most of the successful AMCs would rather have a very, very stable underlying team and not vice versa. So the moment you have a stable, good team, I think the fabric and the edifice is continuing to deliver what it needs to deliver. And I think, in some sense, we feel it's a nice conjoined team. Yes, we need a few more analysts to plug in, but I think the way it has shaped up so far, it has held us in good stead, and we continue to hope to deliver outsized returns. Thank you.
Yeah, a couple of words from my side. I think if we look at the consumption fund, I think it will be suitable for long-term investors or investors who are looking at tactical allocation in this space, or those who are simply looking to benefit from an expected growth in consumption that will happen in India. So we hope that the investors like the idea of it catering to all, it being a fund for all ages, for all consumption-oriented themes. We believe that it should be able to deliver a very good experience for investors looking to invest in the consumption theme. So that is my submission to those who are watching. Over to you, sir.
All right. Thank you. Thank you, Rohan. Thank you, Deeman sir. Thank you. We have had a very detailed discussion on the whole theme and our ITI Bharat Consumption Fund NFO. This is just a reminder that the NFO is now open and will remain open till the 20th of February 2025. I would request investors to consider this fund as a potential investment option. I'm sure Deeman sir and Rohan, both of them have given us compelling reasons to do so. Do consider it if it fits your asset allocation and your risk profile, right? Now let's take some questions which are there on the queue from the online audience. And the first question that we have is, what time frame should an investor consider while investing in ITI Bharat Consumption Fund?
So I think we should look at it from a longer term time frame itself. The consumption recovery story, especially on the staples side, is just expected to start. It has not even begun at this point of time. So you should look at the 5 year time frame at least for the entire story to play out. Anyway, for any investment, we should not be investing from a perspective of overnight returns. I think long-term investing in quality companies, that should always be the objective, which we'll aim to attain in this fund as well.
I would say till eternity, because I don't think so. Till next few decades, India consumption is going down in any of the imaginable consuming sectors. When Maruti launched the Maruti 800, at that time, I'm going back almost 40, 50 years, 40 years, 30, 40 years. At that time, you did not have any choice in terms of cars that India had to offer. You had that insipid Fiat and Ambassador and maybe Standard once in a while. And this was a revered family car at an affordable option. And today you have cars being launched almost every second month. So that's the power of consumption. So you touch base any sector, be it rail network, you are the third largest. Be it road network, you are third largest. Uh, Defense being just opened, sorry, defense would not be relevant, but I'm saying you take sector after sector, I think it's only gone up and up one way. So to my mind, I think so. It's just begun, and I don't see this at least going or even shrinking for next 40, 50 years. So I would say that longer period, which one should possibly stay invested in this.
Thank you, sir. Thank you for being this optimistic about the whole consumption space. While you
I'm
did
not optimistic. We are experiencing this. This is our experience.
Absolutely, absolutely, sir. So, any subsectors do you have? You did mention about some sectors that you would want to, look at. Any subsectors within the whole category is the next question that we get from our online audience.
Let me give you examples here as well. So, automobiles will have subsectors like lubes, uh, like, some of these consumables like tires and so on and so forth. So, that's one. To FMCG, there could be the underlying could be from the packaging sector, for example. Somebody who has high-end packaging solutions would naturally benefit a lot. So you can, kind of encompass this slowly and steadily. The subsector to a telecom could be the Netflix, the media sector, the Netflix, the OTT sector that we consume. So on and so forth. So you can have very many examples of these subsectors.
Sure. And the third question that we have is that if there is any sectoral cap that you would have on while you invest, while you create the portfolio.
Rohan, can you take this?
There's no sectoral cap that we have in terms of the portfolio. We will be looking to invest in those sectors or subsectors which we expect to do better over the medium to longer term. So all sectors as defined by AMFI which fall under the consumption basket, we'll be of these nine sectors, we'll be looking to pick a portfolio of the best stocks that can give the best possible return over a period of time, and all nine sectors and the subsectors that are part of these sectors will be considered.
Sure. Okay. I have the final question, which is coming from the online audience. Do you feel that the valuation in the consumption sector has bottomed out, and will we be able to see an uptick? So more on the consumption. Deeman sir, if you would want to take this up, please.
This will oscillate between a certain range. So, let's say 40 to 50, for example. I'm just throwing an imperfect number, but it will oscillate. And given the market correction, all these sectors have corrected. It's not that by and large, minus maybe give or take the pharma. I think most of the sectors have corrected meaningfully. So that said, I think, and this being more stable and more a daily routine in terms of you consuming so many of them in various forms, various ways, and at various intensity levels, I think, this will be resilient to the downfall. So it has certainly been resilient, as I already said in one of my statements. And also, as we emerge, there will be newer themes that come out. For example, let's say within automobiles, you will see a sudden acceleration of EV adoption. And EV will have its own ecosystem in terms of suppliers of batteries and chemicals and so on and so forth. So, that could take off meaningfully. So yes, valuation I said in comparison to let's say Nifty 50 or Nifty 500 will be elevated, and perforce so because I think Nifty 50 is encompassing uh, almost 13, 14 sectors, including metals and cyclicals, and so on and so forth. Whereas consumption brings in much. So underlying is so much more surety. Yes, you can have variance, but you cannot zeroize consumption. You cannot say that I will not consume water for 25 days and only food, and everything needs to be balanced out. So to that extent, the elasticity of underlying demand can vary, but it cannot. It's inelastic to a great extent, given the fact that you will need to consume. So to my mind, it will the surety brings in surety of cash flows. A surety of cash flows, along with strong brands that cater to this entire underlying theme, will mean elevated kind of valuations. But so be it. I think if there is surety of earnings, one wouldn't mind paying a tad more. That's the way we would take it.
Great. Thank you so much, Dhiman sir. Thank you, Rohan, for joining in. Thank you for spending time and having such a detailed discussion with us. I'm sure the audience will benefit from your views. Again, a reminder that ITI Bharat Consumption Fund NFO is now open and will remain open till 20th of February 2025. With this, we are at the end of the session. Thank you so much for the audience also for joining in. This concludes the call. Thank you, Dhiman sir. Thank you, Rohan.
Thank you. Bye.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.